GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as rewarding as finding a hidden $20 bill in your pocket. I'm your host, Jay Hamilton, and back on the show today is everyone's favorite crypto investor, Lark Davis. Lark, anyone that's been in crypto the last few cycles will tell you that there's always this period before the banana zone, before things go crazy, where conditions try to shake you out. It's often referred to as the boring zone. The question on everybody's mind right now is, are we in the boring zone and about to go in the banana zone? Or are we actually just at the start of the next bear market? What do you think?
Well, a lot of it depends on, of course, macroeconomic conditions. Crypto is going to broadly follow macro as some sort of, again, beta of a beta of a beta, right? Right now, we're seeing the big banks even stepping back a bit from their initial crazy, like, oh my gosh, recession's coming. Goldman Sachs, I remember a few weeks ago we were talking about, they raised their recession chances from 15% to 25%. And this week they're saying, actually, we're going to pull that back to 20%. And if you look at a sort of 2 to 3 year chart of Goldman Sachs predicting recessions, they've been calling for a recession since basically late 2021 with these kind of odds. So, the banks are not the best reliable indicator for is a recession going to come or not. But you can't fight the fact that right now, Bitcoin, Ethereum, Solana, they're all in pretty rough situations, right? And if you take those three assets, they make up almost 60, probably 70, 80% of the total crypto market cap. So Bitcoin's been in a downtrend since March. Ethereum's been in a downtrend. Ethereum ETFs have not made a significant difference yet. So are we in a bear market for crypto specifically? I don't really think we can call it a bear market, but we're definitely in a downtrend until proven otherwise for crypto. And that's not great, especially frustrating feeling when you see the equity market's just raging back with a wild ferocity. The S&P 500 is now a stone's throw away from hitting a new all high. It's just like, crypto, what's going on, man? But if macro conditions can keep holding up, and for most intents and purposes, the U.S. economy is just staying stubbornly resilient. And if that keeps happening, if there keeps not being a big recession in the USA, which, again, a lot of fragile things out there in the system, the 0.25% interest rate hike from the Bank of Japan proved how fragile the markets are right now. But has not happened yet. We've had some scares. Definitely had some scares, but the markets keep trucking along. So the banana zone could be closer than we think it is. And I think this is the kind of wild volatility that's just normal in the crypto markets, as difficult as it can be to deal with sometimes.
I think that is probably the most true statement. Volatility like this is normal. Everyone take a deep breath. This is part of your daily now. This is what you're here for. You came for this. You wanted this, right? Okay. For just quickly, for those who don't know the term boring zone and banana zone, can you just explain and give us a little bit of a history lesson?
Sure. The boring zone, basically, this is the time when nothing really happens. And this is a great chart here to show. And I think 2020 is so just exemplary of the boring zone. If you weren't here in 2020, it was like watching paint dry. We literally had weeks on end for Bitcoin where the price barely moved daily close wise more than a few $100s in either direction. It was just flat 4 months. Then Saylor bought some Bitcoin and we had a pump, and then we went flat for months. Then we dumped again. Then we went flat for months until things finally caught enough steam. We were in that post-Bitcoin halving world where eventually the supply and demand mechanics caught up, and then things start moving. And here's the thing with crypto. This is not your granddaddy's S&P 500 index, okay? When things start moving, they move really fast in crypto. And Bitcoin's hard, man. And you will see markups. You'll go from questioning your life choices to thinking you're a genius almost overnight because prices start pumping so fast. It's a wildly volatile market, and we all love the upside volatility, but nobody really likes the downside volatility. But it's the price that you pay for the outsized returns in this market. So the banana zone is going to be when you see wild markups right across the board. And to an extent, we're still just basically on course for a 4-year cycle. As crazy as it seems, the new highs before the Bitcoin halving due to the Bitcoin ETF. That was our mirage in the desert, the illusion that we all got a little too excited because, wow, look at what's happening. And hey, $17 billion are coming from those ETF products. But for most intents and purposes, it seems like unless the global macro scene totally has a meltdown, we're pretty much on course for a 4-year cycle at this point. Obviously, there's indicators you want to watch if something pops earlier or later even. But right now, it's looking like maybe the contrarian case is almost the 4-year cycle right now, and that could be where we're going.
When we look at the boring zone versus the banana zone, what are some indicators, some signals to you that we are in the boring zone right now?
There's been so many. You can look at the absolute lack of volatility. And I know what you're going to say, but Lark, the last few weeks have been volatile. They have been, but we've basically been in a range between $50,000 and $70,000 since March. If you look at a lot of indicators, it's been a time of relative lack of volatility, minus that big sell-off that we had the other day. Plus, during this time, what have you seen? Massive accumulation. Massive accumulation. And this chart that you have up here is just wild. Now, it includes the spot Bitcoin ETF number $17 billion plus have flown into those spot ETFs. So huge numbers here. But that masks a bigger picture that we have all these banks getting on board. You have everything sort of just cooking in the background. It just hasn't had the price impact yet because we've had all these overhang issues. And the wild thing about these overhang issues is that they're mostly taken care of, right? Mt. Gox is basically done. They only have 30,000 Bitcoin left. Most of it's been distributed back to people. Germany's largely done. The U.S. Marshals selling off the Silk Road Bitcoin, that's not even that big of a deal. They sold 10,000 Bitcoin. Everybody lost their minds and it was like immediately absorbed by the market. And 10,000 Bitcoin was taken off exchanges basically the next day. Whales accumulated. The Bitcoin ETFs have more than enough capability to absorb that kind of Bitcoin. It's non-issue at this point. So there's no other big overhang issues that can really dump markets. Maybe the UK sells their Bitcoin. I think they have 61,000 Bitcoin, something like that. And that could spook markets. But again, it'll be one of those, the bark is worse than the actual bite stories. Markets tend to overreact to these supply entrances. And then, of course, they're probably going to underreact to the fact that FTX investors are getting $13 billion in cash back in probably 3 or 4 months' time, right at a time in Q4 when we're likely, based on everything that we're seeing right now, to have that potential breakout moment here for the markets. When Bitcoin finally recovers 72K, then we can start talking about major markup periods, and at least maybe not the full banana zone, but we're going to have some bananas, okay? It'll get pretty nuts pretty fast when we go from 72K to 100K in a few weeks' time. Then all the altcoins get marked up. The FTX money comes in. The U.S. elections come in. We have had 2 or 3 rate cuts by then. Stock markets are booming. Like, this is the best case scenario, right?
Let's look at a couple of other charts, which really tell us where we're at and where we're headed. One is a chart that you've discussed on the show with us in the past, which is the Global Liquidity Index. And you mentioned liquidity at the beginning. Where are we at right now? And why does this indicate to you that we could be headed towards the banana zone?
Well, this is the rising tide that lifts all boats, essentially. And we're bottoming out in a lot of things right now. A lot of these economic indicators, again, we're either on the verge of a mega recession, it's all going to go bad, or we're actually just bottoming out on a lot of this stuff. We're going to see an uptrend for potentially the next year or so. With 2026, probably finally when we get that recession, at least, especially if you're, counting on pig farmers from 100 years ago to give you that indication that 2026 is the year you want to be out of markets. And the Global Liquidity Index, it's fascinating how it all works, but the Global Liquidity Index is showing a similar thing right now. Now, maybe the central banks pump more money for longer, et cetera, but they generally are going to have some big injections. Lots of liquidity is going to come in. And look, the Global Liquidity Index tracks different things, right? And those rate cuts are coming. We're already starting to see rate cuts in a lot of major economies around the world. New Zealand just cut rates the other day. The UK, the ECB have cut rates recently. Banks are talking about putting lots of money in the market. And I think the U.S. Treasury's buyback program started last week. I'm pretty sure maybe it was 2 weeks ago. I think it might have been the 6th or the 7th of August. So they're putting in about $15 billion this month, about 30 billion next month and about 10 billion or so the month after. In total, it's a little over $50 billion, around $50 billion. So that's happening in the 3 months leading up to the US election. The US Treasury is going to buy back $50 billion of bonds, right? So we're seeing the distortions in the market already starting to happen. And this is going to pump up global liquidity. And when global liquidity goes up, risk assets go up.
Another key indicator for where we are in terms of boring zone versus banana zone is sentiment in the market. And often during boring zone, no surprise, sentiment is not going so well. If we pull up the sentiment chart here, I've got the chart of the last year of sentiment. What do you see? Where are we right now? And what does that say to you?
What's crazy is that sentiment right now, while Bitcoin's hovering around $60,000, is basically a throwback. Last time we had this bad of sentiment, Bitcoin was at like $30,000. It gives you some interesting perspective on how recency bias can affect the markets and how people can look at the markets and see, because price actions are bad recently, I'm so much more afraid, right? Everyone's thinking this is not a beginning, this is an end. And so it's very interesting to watch how the greed flows and the fear flows in the market. And if you look at a lot of different indicators, there's like the net unrealized profit loss and a few other different indicators you can look at. And they basically all show a pretty big reset here in terms of what's happened with market sentiment and showing that it's definitely at a low period right now. So in terms of sentiment wise, this is the exact kind of sentiment that you expect. And I was talking about this earlier this year on the channel that you may actually have the max pain scenario play out, which basically has played out. And that is that Bitcoin's going to range sideways for months and months on end after we hit that high. And that's exactly what's happened. And of course, while Bitcoin's ranging sideways, everybody starts questioning all their decisions. Mm-hmm. And that means that altcoins start going down. And we keep having billions of dollars a month of inflows of new altcoins with very few buyers to pick them up. So we've seen a lot of pain come in there specifically. So this is that, again, that kind of very boring, price trending down, not that much happening price wise, but it's weird because the fundamentals for this market have literally never been better. The fundamentals today have never been this good. If you told me all this stuff was going to be happening 4 years ago or back in 2017 when I started investing, making content, I'd say you're crazy. That's crazy. BlackRock's going to have Bitcoin ETFs. Get out of here. All the big banks are going to be selling it. Get out of here. Come on. It's absolutely nuts what's happening right now.
So let's just talk then. When you say it's nuts, but yet the prices aren't going there, mm-hmm. it doesn't mean we're not the only asset market out there. It doesn't mean that there isn't good things happening, which could lead you to believe that the banana zone is coming for the crypto markets. You put out a tweet from your newsletter today talking about the price of gold. What does this say to you?
This shows that investors are looking for safety in the markets, right? There has been a bit of paranoia. We've seen gold go up now to new all-time highs. What's interesting is that there's a few great charts floating around on crypto Twitter over there that show an interesting correlation between gold and Bitcoin, that often Bitcoin will follow a few months behind where gold markets go. That gold's almost a canary in the coal mine for us in terms of price movements, that investors, the traditional investors, will start flocking to gold when they sense whatever is going on in the market. And then the alternative investors will catch up on that a few months later when Bitcoin starts making moves behind that as digital gold, of course. So it's very interesting to see that correlation playing out. And I think as more and more people are looking at that liquidity index and realizing that, holy crap, the central banks are going to print all kinds of money again, aren't they? They're going to have to print all kinds of money again. They always do. And it's coming. The easing cycle is coming. So based on that, holding some gold, not a terrible idea. Holding Bitcoin, probably an even better idea.
Okay, I'm going to ask you your favorite question. When? Always the most difficult question to answer. But if we are in the banana zone right now, in the boring zone right now, when can we expect the banana zone, or any indicators, any things that you're going to be watching, major events that you're going to be watching in these coming months that you think could tip the scales?
Sure. Look, Here's the thing. People like to say that the markets can remain irrational longer than you can remain solvent. This is true. But markets can also remain boring longer than you can stay sane. Oh my gosh. The problem for a lot of investors right now, and I've even experienced some of this recently, you get bored. You start looking, I'll go buy some meme coins. That's fine. And say goodbye to all your money. But anyway, what are we looking for in terms of seeing things move towards a banana zone situation? Well, of course, we have to break the range. We have to break the downtrend until we get a decisive break, really, of $72,000. And people will get pretty excited, I think, if we get up to like $68,000, $69,000, because that could be breaking the downtrend that we're in for Bitcoin, right? And that Bitcoin's going to lead the rest of the markets. I think the reality is that until Bitcoin breaks 72K with some kind of decisiveness, that the rest of the market's probably not going to do that much. Yeah, there's going to be little narratives and different coins that pop off, but until Bitcoin breaks 72K and starts going back into price discovery, don't expect that much from the markets. Now, when does that happen? We're getting closer to it happening than not happening, right? That's one thing I can say. But we have a lot of big things coming up, right? We have rate cuts coming, which, again, a reminder, when rate cuts happen outside of a recession, they are typically a bullish event that sends stock markets higher. And if stock markets are going to go higher, at some point, investors from that world start looking, going, I want bigger returns. So they start buying Bitcoin, they start buying Ethereum, money starts flowing down through the rest of the market. So that first rate cut's coming in September, right? Unless we get some big surprise from the Fed and they decide not to do a rate cut. But I think everything that we've heard from them is that they're going to do a rate cut, and the markets will be pretty surprised if they did. If they don't, hold on to your butts. Let's put it that way. But assuming the rate cut comes and it's a 25 basis points one, which basically is the Fed saying it's okay, we're in control, we knew all this was going to happen, this is the soft landing, we're going to pull this off, everything's going to be fine. Markets should like that. In that situation, then we have US elections coming up. So we're looking at potentially, could be as soon as September, we could see big price movements, but that almost feels a bit preemptive. Maybe October or November are when we're going to really start seeing things kick off in the market. But again, you can just keep this as a simple indicator in your mind. Wait until Bitcoin breaks 72K. Until then, it's basically an accumulation zone. It's a boring zone. Now you can wait to buy the breakout. That's also fine. You can wait until markets actually show strength, and there's a lot to be said for doing that, right? If you're just thinking long-term spot bags, great. Accumulate. Don't think about it too much. If you're waiting for the breakout moment, then you got to wait for 72K for Bitcoin. And then when that starts moving up into the higher 70s, that's when things are really start moving for the crypto markets. But until that break happens, we're in the boring zone. We're the banana zone's in sight. But we have a lot of stormy seas to get across before we get there.
And when the banana zone comes, if we look at past cycles, how long does it typically last?
It can last generally a pretty short amount of time. This is the wild thing with crypto markets, man, is that we wait years for basically a few months of wild market action, right? So if you look back at, it's a good indicator. You look back at 2020 and prices started to move in about October, and we basically ran until April. Now I know we got a second peak later on, but that wasn't a given, right? We had already had the Pi cycle top indicator flash off and all that kind of stuff. It was just the El Salvador thing that really got everybody excited and ran the markets up a second time. But basically that whole bull run, if you'd sold in April and the Pi cycle top indicator had flashed and sold all your altcoins within the following 2 weeks, you could have just sailed away and not worried about any of the rest of the crap that happened for a few years. Really, you could have. You would have been fine. Oh, you sold your Bitcoin for $64,000, not $69,000. Who cares? Who cares? Who cares, man? Doesn't really matter, right? So you don't have a huge amount of time. So let's say markets start taking off in October or November, right? Then you're looking at a potential, at least first peak for the market coming in March or April next year. So, and it'll be a tough time for investors because everything's going to be telling you, great, markets are up. Bitcoin's either gone to the 1.618 fib line, which is around $100,000, and maybe we've even pushed up to 150K at the 2.618 fib line. And that's when everybody, new paradigm of money, we're all geniuses, it's going to go up forever. You know, now is the time to bet more. I need to remortgage my house, buy some dog coins. That is when, not the time to do it. Not the time to do it. Right now during the boring time is a time to accumulate if you have cash, if you can, right? Or just, unpopular opinion, Sometimes the only thing you need to do is just wait. You don't need to be buying bags. You don't need to be selling anything, right? You don't need to be trading. You can just sit and wait, which is almost the hardest thing to do because you feel like you want to do something. Sometimes there's nothing to do except wait for the banana zone to come. And maybe it takes longer. Again, nobody has a crystal ball, right? We just talk about models. We talk about rhythms in the market, all this kind of stuff, things that might help us predict what could be coming in the markets. But I don't have a crystal ball. Nobody does. Okay. And you can see that from the banks, right? People whose literal jobs it is, like suits, whole offices full of people. Their literal job is to sit down and do this stuff. And they're wrong all the time. Right. So how are we as just regular investors out here supposed to really figure out what's going on? But we know what things look like when they start happening. Right. So how long it takes us to get there is an interesting question. But when it starts happening, then we can recognize it's happening. Right. And it then becomes very much beholden to us to keep ourselves sane and to remember the good times never last forever in markets. In fact, they're often rather short lived. You might get 6 months of crazy market action, and then shit hits the fan. So be ready for it.
So basically, everybody, you can go on vacation right now. We're in the boring zone. Go enjoy the last couple weeks of August. Take some time off. Don't even look. Come back in September, October, and then you make sure you listen to us for the next 6 months straight so you don't miss it when we see that we're at somewhere towards the peak. Not that we're perfect, not that we're going to predict it, but we'll do our best to keep you guys informed. Lark, thanks so much for walking us through the boring zone and the banana zone today. Again, I just want to remind all of our listeners, we have a campaign going on right now to subscribe to the show in order to win a bunch of free prizes. So make sure you subscribe on YouTube right now before you leave. Not only are you going to stay up to date with Lark and everything on the team, that we make sure you guys know where we are in the cycle, but also you could win some awesome prizes, our investing course or a subscription to Milk Road Pro. Remember, none of this is financial advice. Investing in crypto is risky. You should only invest what you can afford to lose. Thanks so much for listening, and everybody, have a wicked awesome day.